So today I'm going to talk about a stock that I might sell. I am thinking about selling this stock, and not that I've fully decided where I'm going to go yet. I am probably going to sell something about this stock. Maybe it's 10%, 50%, or 100% on the position. But I wanted to tell you my thought process on why I might sell it, and then also leave it. I'm kind of looking for your opinions today. Let me know in the comment section what you would do in this position as well. But I am going to sell. I'm just trying to decide how much I currently sell this stock, and I'll show you what I'm thinking about today. Before we do, eToro portfolio currently up 40% year to date. Not too bad performance at all. If you do want to follow me on eToro, link is in the description, guys. And as well as that, if you are on the Patreon, I did just drop an exclusive video on JD Sports earnings. They reported their interim results today and my updated thoughts on them. So if you do want to see that video, links in the description. £5 a month. Unless you are on the Patreon, go check it out. So, the stock today, which one is it? Alibaba. Alibaba is the stock I'm going to be talking about today. And I'm really considering selling some of the position here with Alibaba. Now, it's been on a great run in today. Absolutely fantastic day. Stock's up at about 8% today, which is great. But look at the year-to-date performance. Up 108% year-to-date. How many people had Alibaba been up over 100% this year down on their predictions for the start of the year? Not many people. What a year it's been for Alibaba. And with the run that it's been on, I am considering taking some profit, taking a significant amount of profit, or maybe even selling all the position. I'm not 100% sure yet, and I'll tell you why. But yeah, really, really good run up that Alibaba is going on at the moment. Now, why is it going on a run up at the moment? Well, you might look at the recent earnings, you might go, not great, but the 2% growth that you're seeing here is actually 10% is that they dispose of the businesses, so it's not too bad at all. But the big thing is they've solved two issues, two really big issues. So the first thing is AI. They're becoming a major player in AI. So you look here, the e-commerce giant reported a triple-digit surge in revenue from AI-related products, which is obviously significant amounts of growth there, which is great, along with stronger than expected 26% increase in cloud division sales. And that's really key as well, because cloud was starting to slump down for them. When you look at Alibaba overall, like what happened with Alibaba is that I first started owning in 2018 when the tensions were quite high between the US and China during that time frame. They kind of calmed down and the stock went to rally up to about $300 then. I actually sold about half my position out at that time frame, but from then the stock then fell and whacking 77%. A couple of reasons why: just the slowing Chinese economy, obviously the CV situation, but also a ton of regulation that came from the Chinese government during that time frame. And all those factors really hurt Alibaba, and they really suffered financially as well. And one of the key drivers for the business was the cloud business, and it stopped growing. Now what we've seen in the recent quarters is we've seen this cloud growth starting to return massively, and obviously this AI is absolutely smashing at the moment, and people are getting excited about Alibaba again, really. And it's the cloud's a key part for them, because obviously with cloud, there's major amounts of profit that they can make from the cloud. The thing as well is that when you look at someone like Alibaba, at the end of the day, the big dogs in China, the when you look at China, they want to use Chinese products ultimately. That's what they want to do. They don't really want to use US products, so they need someone to do well in China so they can keep using basically, Chinese companies. Just like the US are quite reluctant to, use Chinese products. China are quite reluctant to use US products. So China also want this to succeed for their also benefit for security. And obviously what Alibaba have done is they've got clearly a great AI product that's growing here, but also cloud is also doing very well for them as well. And the news came out today as well that Alibaba are looking to ramp up their spending plans into AI. Obviously, the fact that they're seeing so much success thinks, let's keep going for this here. And also they tied up a pretty partnership as well with Nvidia as well, which obviously the market is liking, because Nvidia are also referred to having the best products on there that will also help them. So that is just a combination of the market getting excited about seeing the growth come back, the cloud come back, and the AI growth at the moment is really starting to lead the stock up. So why would I really consider selling the stock? Well, the thing that makes me nervous about Alibaba at the moment, and going back to 2022, is that when we were in the 2022 situation, I never thought I would see the Chinese government regulate and destroy the Chinese businesses. but they did. Like they went so much further than what I thought they were going to do, where I saw them really make it tough for their own businesses. And I never thought they'd get to that point, because I thought at the end of the day, like, they'll tell them off, they'll give them a slap on the wrist, they'll give them fines and all that, and they'll tell them a couple of things that they need to do. But they'll never get to a point where they really disrupt them. But they did. And I never thought that would happen. I remember making videos back in 2021, and I was like, nah, surely not. Surely they won't go that far. And we saw it with Alibaba. There was a couple of other Chinese stocks that I own, and they made it really tough for them. And that's when I looked at it in a different light. Like, a lot of people always say, like, oh, I don't invest in Chinese stocks. And I was like, you got to put them at a lower metric, but there can be some good winners there. And there certainly can still be good winners there. But what really surprised me was to see the amount of, like, regulation that sometimes the government can throw on the companies. And I was like, wow, never thought it would go that far, but they can. And that would also make me nervous from a point of view, like, all of a sudden Alibaba is starting to see this surge up in AI and cloud. And, what happens if the Chinese government do something stupid about regulating this AI market, or, regulating the cloud market? You'd say they wouldn't do it, but I've seen them. I reckon they would have it in them if there was any point, like, that they could, snap the things and say you can't do that anymore, like sell it to certain clients, or they have to, like, I don't know, sell, like, part of the AI business to the the Chinese government, or the AI business has to be separated into a separate company, somewhere on those sort of lines. I could generally see it happening, and a few years ago I would have said never, but now with what they've been like in the last few years, I generally could see, like, this could be an issue further down the line. Now, ultimately, the annoying thing is that you are starting to see Alibaba start to return to decent growth levels. Like, next year there's about 10% growth expected on Alibaba, which is the best amount of growth that I've seen Alibaba do for a long time as well. And Alibaba as a whole, like, they used to not care about the shareholders, if I'm being honest. They didn't care. Like, they were literally like, yep, buy us if you want, whatever. And then after they got slapped by the regulation from the government and the slowdown in the economy, and then they saw the share price fall from $300 and it went all the way down to what, $60, $69. They kind of went, oh, actually, we might need these shareholders in our business. And then they were like, okay, what we're going to do now is we're going to start doing dividends. We're going to start doing share buybacks. And Alibaba went from a point of view where they had 2.7 billion of shares outstanding, and now they're down to 2.3 billion. I mean, to do in basically a 4-year period, to reduce your outstanding shares by 20% is pretty significant. And the thing is, we're talking about a company at the moment that's trading at a 420 billion market cap. Like, to reduce 20% of your market cap on that size, it's not easy. It's not easy at all. So, they kind of went, actually, we recognize these shareholders. The other thing as well that you might argue is that, Alibaba might actually look after the shareholders a little bit more than what they have been doing historically as well. And obviously, it's a highly profitable business. They've got decent profit margins. They've got a pretty decent balance sheet as well overall. And so I'm stuck in two minds here, where I'm like, it's been on a good run. The valuation is 20 times earnings. I don't see a Chinese company really going above 20 times earnings, because, the market being fearing around the regulation that's around it. I'm like, is it time to now move away from it? And then I look at the case of, well, if this is the start of the AI boom, and we have another 5 years like this, and cloud carries on ramping up, and that revenue keeps accelerating, and they keep starting to reward the shareholders right now, do you continue holding? And it's a bit of a tricky situation. Ultimately, as always, as you do, rather than kind of flipping a coin and playing it in your head, look at some numbers. So, I threw some numbers down here. So I put 5, 7, 9% revenue growth in. You could argue the case that maybe the revenue speeds up faster than that. 14, 15, 16% revenue growth, profit margins, which is about where they're at right now. 20 times earnings, which I think is about fair for a Chinese stock. I really can't see a premium being thrown on a Chinese stock after what happened in 2022. On the low side, you got 17% on the upside, 35% on the mid side, and 55% on the high side. And I look at those returns and I go, well, if those are my returns, let's say the really best case scenario, 55% return, you're probably not going to beat the S&P 500, because the S&P is going to come in around about 50%. So from that point of view, it'd be like, I might as well sell the position. Now, there's a couple of curveballs here because, like we said, they've been buying back shares like crazy. Will that continue? I don't know. But you could throw in let's throw in a bit of a share buyback here, around about let's say they do about a 10% share buyback over the next few years. Let's say that cloud growth really accelerates and that AI really starts generating revenue for them, and the upside now is 12%. And this is the other thing, is that when you look at Alibaba on a profit margin point of view, so currently, right now, they're around about 14% profit margin. Before all the stuff that happened in 2022, you can see here that the company was up to about a 24% profit margins in 2020. If you go pre-2020 as well, so let's go 2019, 34% profit margins, 23%, 20, 25, 29, 30, 26, 42. So you can see the profit margins historically have been a lot higher, above the 20% range. Now, the forecasts at the moment are for the profit margins to stay roughly where they are, but as we know, that cloud platform is generally quite a profitable business. So you would maybe expect the profit margins to expand a little bit. We're seeing the same with Google and Google Cloud at the moment, for example. So, let's say that all of a sudden that, that Alibaba's able to, drag up to, more of a historic 20% profit margin. See, now you're getting up to 100% upsides. And this is the real big wild card. I don't think it will happen, but let's say all of a sudden the market goes, oh, you know what, China, Alibaba, one I want to invest in as Alibaba, they've got the cloud growth, they've got the AI growth. This is the been, returning capital to shareholder. This is the best growth they've had for many years. Let's say the market all of a sudden throws the stock up to a 25 times earnings multiple, or let's say that all of a sudden the market goes, actually, let's throw the stock up to a 30 times earnings multiple. Well, the thing is, then you're looking at the stock and you're getting 225% upside to 259% upside. Now, I know there's a lot of dream situations in here where the revenue starts to really accelerate. They do start doing, more aggressive share buybacks. They do get those profit margins a bit more up to where they used to be, and they do trade at a premium. Like, even if I take the premium off, because that's the one I think is the least likely to happen, you're still getting 100% upside there. And you know me, if it's 5 years and I'm seeing 100% upside, I like that. So I'm really, this is the long time, this is the longest I've been where I've been so stuck on what to do with a stock. Like, really stuck, because my basic numbers are telling me sell, but I'm looking at like a variation of what can happen, and there's a few variations that can happen, and then in the best case scenario, you end up getting 200% upside pinging up. So it is a bit of a tricky situation right now what Alibaba is in. Ultimately, I am probably going to take some profit off the table, because, as always, when a stock tends to run up like this, especially this in the last month, it's up 44%. There tends to be some profit taking that does go on during that time frame, and I think right now, like I said, 20 times earnings is relatively quite fair for what the numbers are doing right now. So I'm certainly probably going to trim Alibaba. I'm just more stuck on, is it a small trim? Is it half the position, or is it all of it? That's what I'm trying to work out at the moment. So I'd be interested to hear your thoughts today in the comment section on what you would do in this situation with Alibaba, or if any of you guys did have Alibaba and what you're currently doing with your position. But it's just after, so many years of being basically, the kind of, 20, we talk about patience in the stock market all the time, don't we? You've had to sit on Alibaba for basically 2.5 years. 2.5 years basically you've had to sit on Alibaba and it's done nothing, and yet the market's gone up, and it's you're like, and now you finally get some money, like time to lock a bit of money in. But it does show patience, doesn't it? I mean, realistically, if anyone bought like Alibaba in like $60 range, $70 range, what a return that is, isn't it? Yeah, I wonder if Charlie Munger still has his shares. But yeah, I'm a bit stuck at the moment, but I'm not stuck. I'm just undecided on how aggressive to sell is ultimately what I'm deciding anyway. So Let me know your thoughts in the comment section anyway. Thanks for watching, guys. See you in a bit.